Happy Friday, Maverick Currency traders. I am Rob Reinhold. I'm joined by Ankit Sharma, and this is the Currency Room for the second week of July. So first week of July is already in the books. Let's look forward. In this session, we're going to talk about the news of the week. We're going to take a look at what happened in the broad markets. Then we're going to take a look at the market, how it is right now. We're going to forget everything we had a bias to last week, and we're going to rescore everything from +3 to -3, and that's going to tell us what to buy and what to sell this week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Let's start off with the news last week. We did get a breakout in equities. I believe last week I said with a holiday shortened week, I thought we were going to get more consolidation and then breakout next week. You know, the market has yet to listen to me. I've been doing this for 27 years and it is yet to do what I tell it to do. It's crazy. It decided it wanted to break out on Wednesday on a half day, and then we had some follow through on Friday. So look, we had a breakout. We're going to take a look at some of the numbers here. This market is a very narrow market at the moment, but the ultimate proof and truth is it's broken out higher. So we have to remain bullish no matter what we think. We did get some things that are going to help this equity market go higher. We have the US dollar weakening. We have bond yields weakening. We had weak economic data in the US, which tells us that the Fed is likely to cut rates. And we did get a really ugly week in the crypto world. We saw a big crash, and we are now below support levels. We're going to take a look at the charts. If we don't recover quickly, crypto is in some trouble. We're going to take a look. This did this about 2 months ago and recovered. So we're hoping it's going to be that same story here. Let's take a look at what happened last week. We had elections in France, and in France, you saw far-right candidates take some seats in the elections. But then on Thursday, in England, we'd had the far-right in control for 14 years, and it swung back to the Labour Party. So look, these elections always are an effect in currencies, and we'll have to see what the effects are going to be. Originally, the effect was fairly positive on the pound outside of those elections. But let's go through some of the other numbers because, again, first week of the month is always stacked up. So we got weaker CPI out of Germany. However, we also got a little bit higher than expected CPI out of the Eurozone. I don't think these numbers really are going to scare anyone because these are year over year. So year over year numbers, they fit right within the ECB and what they're expecting. I think this is just perfectly fine. And then the German CPI falling month over month is really telling them, hey, we're still on a downward path in inflation. We got two ISM numbers out of the US. We got ISM manufacturing at 48.5. Now, this is manufacturing, so what happens kind of in factories. This has been weak for a long time. However, the services sector had been strong for a long time. Services are 2/3 of the US economy, and this number was a bad number. This was an absolutely bad number. 48.8, anything above 50 is growth, anything below 50 is contraction. This is the first time this number's been below 50 in a very long time. Now look, in any other market dynamic, this would have been a bad news for the market. But what happened on Wednesday? Equity markets broke out to a new high. Why? We want to see lower, slower economic data out of the US so we get those Fed rate cuts that's going to help keep everything up. Now, we're in this very kind of strange place in this market cycle where the market wants bad economic news, but they only want it for like the next month or two. If this continues and the economy starts to actually get worse and deteriorate, the market does not want that. So right now, bad is good, but at some point, bad is going to become bad. It's a weird dynamic, but that's just where we are. We then got lower than expected inflation out of Switzerland. So as you can see, the theme is lower inflation. And then we got employment reports out of the US and Canada. The US number headline was better, but unemployment rate ticked up, which the market liked. And you can see the Canadian employment report was pretty bad. Anka, what was your overall opinion of the economic news this week?
I mean, definitely more on the bearish side. I mean, if you just take a look at the numbers and the price action in the markets, it's total opposite here. So I think we are starting to see that weakness that a lot of people are talking about. If you look at the last few months, the economy was strong. Like the numbers were just strong across the board, employment is strong, and you can see things are changing a bit here. So is it a precursor sign that things are changing in the coming months? It could be. And like you said, it's just a 1 month data, so people are not really worrying too much about it. But again, going to next month and a month after that, if that becomes an issue, now that's something that market has to worry about. But I was definitely surprised that now, after staying strong for so long, we started to see that weakness. Even the employment report today, we did see an uptick in that unemployment rate as well. We are now above that 4% mark, that 4.1. So we are seeing things change. And if that becomes a pattern, I think then that's where we got to make that shift in the markets.
But right now, good news is good news, and bad news is good news. The market sentiment is very bullish at the moment, and we've been at a +3 for a long time. And we've been saying, look, no matter what you think, no matter what your opinion is, the market's going higher, and you've just got to get on board with it. So this week, another strong week for the markets. S&P up almost 2%, world markets up almost 2%, gold, oil up 2%, and look at the absolute disaster in crypto, down 14%. We're going to take a look at those crypto charts here and look and see what's going on. S&P, clear breakout. Clear breakout. Now, I know what people are going to say, and I actually brought this up on my Wednesday video, the low volume. People are going to point out, hey, there's low volume on this breakout. That's true. I'm also going to point out things like there is low, what's called breadth on this breakout, meaning not a lot of stocks are participating. This is very much driven by the NASDAQ 100 and by Facebook, by Google, by Microsoft, by Nvidia, and Apple. This is not a broad market rally, but let me just tell you this. Over the 27 years, I can't tell you how many conversations I've had with traders when there's a breakout, and they say, yeah, but, and they name off all the reasons why this isn't a real breakout. Do you know what typically happens? The breakout keeps running, and they look foolish. They look foolish, but they're digging their heels in even more because, hey, I know I'm right. I know I'm right. Look, no one knows what's going to happen. This market could reverse tomorrow, but we are simply trying to get on what are the most likely thing to happen in the future. And if we go up price action, this is telling you after a high base breakout, it wants to go higher. That's just the fact. And so when you really give your life over to technical analysis, and I know this sounds like giving your life over to a religion or a whatever, but when you really just trust and believe technical analysis, and you just let go of all the other reasons why maybe you should be bearish, I promise you will become a better trader. Because now you're just looking at empirical data, you're not taking in your feelings. So, market's bullish. Here's what happened in the currency world this week. We saw weakness out of, surprise, the currencies of safety. So these were the weakest currencies, and the strongest currencies, Aussie, was the strongest, and we have been pounding the table on Aussie long and yen short and Swiss franc short. Those have really been our focuses. The pound, most of this happened on Friday, so we're going to take a look at the pound chart because for the most part, the pound was untradeable until this move. Let's see if it's now tradable. Everything is doing exactly what it should. Growth currencies are moving higher. Currencies of safety are moving lower. This right here is the one anomaly. Cryptos. Cryptos have gotten absolutely creamed this week. They are looked at as a risk on asset. Now look, I'm not like super into crypto. I trade crypto and I just look at price action. There may be some stories out there I haven't heard of. Ankit, have you heard of any possible explanation for the bloodbath in crypto this week?
No, I haven't actually. But, one thing we have seen in the last few weeks is that weakness, that relative weakness in the cryptos. And I think that's what's really happening here. We were building momentum up for the downside. So it doesn't seem like there was any news catalyst. I think it was just setting up for that breakdown here. So I think that's very independent from what's happening in the global market.
And I've been talking about how pathetic the bounces have been in crypto. They've all been pathetic. And I've said, look, if something's going to bounce and run higher, it doesn't look like this. It doesn't have this pathetic weak bounce off support points. And it's just fallen through every support point. So I think you're right. I think this is just a technical move in the nature of it. All right, we already took a look at the S&P. Let's take a look at bonds. As you can see, bonds came all the way up to 4.5. And at this point, I thought, oh my gosh, this could start putting some pressure on the markets. And you see the absolute collapse of them back down to 4.28. This is very bullish for the stock markets. The stock markets love this. This is very bearish for the dollar. And let's take a look at crypto and look at this absolute disaster here. And this is what I've been trying to point out lately is that these bounces, when it fell through support level, when it came down to support, it didn't have a bounce. Came down here, look at these pathetic bounces. Here's a base. These bounces have been absolutely pathetic and we have gotten absolutely crushed. We are getting a nice little hammer candle. I'm going to take a look at this chart and show you that we did the same thing about 2 months ago. And it actually turned into a new uptrend. A lot of times when things have these disasters and we get a big fall, all of a sudden people get reinterested in getting into them on the long side. But we have to wait and see. It's going to be at least 2 to 3 weeks until the charts show that that's actually happened. We had a very busy week in the economic world last week. This week is much quieter, but we do have a central bank here. We do have the RBNZ. Now the Kiwi has been, I'm going to say underperforming a bit, especially against the Aussie. When you take a look at the Kiwi against the Aussie, it's underperformed. This may be the catalyst that puts the Kiwi back on top of the Aussie. Now look, obviously this is just something we're talking about and we have to wait and see if it's actually going to happen. But what do you think, Ankit? Do you think the Kiwi could switch places with Aussie strength here with a decent RBNZ statement?
That was sort of my same thought on this because if you take a look at the last RBA rate statement, and they didn't make any change, and we saw a little bit more of that strength that we've seen in the Aussie after that. So I was actually thinking along the same lines that are they talking the same talk, and could there be a potential that maybe Kiwi can outperform the Aussie in the upcoming week or so? I would take that bet here. And again, we want to be dependent on the price action, but that's definitely something I'm looking out for. The statement and then what the price action does. And if the price does start to break out, because I think the pattern is exactly the same, it's just that the Aussie has outperformed the Kiwi. But if the Kiwi wants to take over, I think maybe we can make that switch and then go for the Kiwi over the Aussie.
It's definitely something I'm going to be watching for this week. Now let's talk about this GDP report out of the UK. If this was coming out 2 weeks ago, I would have ignored it. Why? Because the pound wasn't doing anything. It was really just choppy and not doing anything. Now the pound is in motion. It's trending. All of a sudden, these reports become more important when something is trending because it can either kill the trend or it can extend the trend. So I'm actually interested in this pound GDP report on Thursday because pound is now moving to the top of my list on what I want to trade this week. And then we have US CPI on Thursday. We'll be making a video on Wednesday, getting ready for that report. That's going to be a big report. So this week, one central bank, we got some pretty big economic reports, but on Tuesdays and Thursdays mostly. All right, let's take a look at each currency, score them from +3 to -3. This is going to tell us where to hunt this week and what to really ignore. Now, I've been working a lot with traders on what to ignore. Forex is a game that I believe that you have to be on the sidelines most of the time, because just think about the whole year long, 24 hours a day, there's a whole lot of tiredness. There's a whole lot of, hey, nothing's going on. If you're trading during those periods, you get what I call chopped up. You make trades and then you get stopped out for these little losses, and it's a death by 1,000 cuts. So you really want to focus on being in the right things that are moving, and also when the market's not trending, to really cut back on your trading. And then when the market is trending hard, this is when you actually increase. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? The amount of your trading. I'm going to go through cryptos here, and we're just going to see that it just does not look great. Let me jump on an interactive chart here, and I just want to point out the Bitcoin chart. So here's the Bitcoin chart, and we're just going to take a look at Bitcoin, and the rest are really, Bitcoin is, actually it's not the strongest. Ethereum's looking a little stronger at the moment, but they all look terrible. And take a look at what has happened. Now I do want to point back to this period. This period on May 1st, we got a breakdown below this support. This was a clear support line. We broke down, and we're breaking down again. The fact that we're getting this really big hammer candle is really telling me, okay, this could be one of those times when it gets so weak that it actually encourages people to come in and buy, where no one wanted to buy in here, but all of a sudden those same people are like, oh, I'll buy here. Look what happened last time. And I just want to really focus on what happened, because this is what you're going to have to wait for if you want to be long in the crypto market. We have this breakdown, and it's bad. Now you cannot try to buy it here, because this is called buying or trying to catch a falling knife. If you try to catch a falling knife, you're going to get cut. Now look, you might get lucky sometimes, but for the most part, you will not make it as a trader if you're always trying to catch falling knives. All right, so what happened is we rebounded and we recovered, and we got back into the range. And then we had a pullback from there, and we held the range that time. And then you can see that we had a pretty good run up to the highs on Bitcoin. So if we're looking at this chart and we're saying, okay, we think the same thing is going to happen, okay, I'll go along with that. But here's what you have to wait for. You have to wait for a rally, and then you have to wait for a retracement, and then you have to wait for that retracement to bottom out, and then you have to wait for that to actually break out of this level. Sorry for all my lines here, but so you have to run up here, pull back, hold a higher level, and then break out of that line. This is where you can actually buy on a technical basis. Before that, it's just a guess, and you may as well go to Vegas and have more fun and get some free drinks, because the market's going to take your money unless you follow technical analysis. So as you can see here, I'm not super bearish on crypto here. I'm less bearish now than I was 2 weeks ago, because again, this hammer candle and high volume, these tend to be reversal points, but you can't buy it. It's catching a falling knife. You just can't. You have to trade in a technical manner. And until we break out above 64,000, it's a no touch. So Bitcoin right now, it's a -2. Bitcoin Cash, -2. Ethereum, -2. Litecoin, -2. Everything looks really bad in crypto. You cannot buy it here because you're just buying it hoping you're right. That's a terrible way to trade. Anka, can you run us through Forex here?
Absolutely. Let's start with our currency analysis and let's take a look at the dollar first. And I think this is one of that currency that's been the difficult one to trade. We got that breakout, and guess what? Fallen back within that range here. So, if you just take a look at the range, we are not at the levels, we're kind of in the middle of that range. So I think this can easily fall towards the bottom end of the range. With the today's data, you can see the last 4 days we have been consistently moving lower. So at this point, it looks like the dollar is more under pressure, and there's not a whole lot of data until the CPI next week, where we could potentially see a big move in the dollar off of that. But I think momentum-wise, this is now on the weaker side. And just keep in mind the trend score is a -2. But overall, if you just take a look at those moving averages on the trend score, it's sideways. So this is more like a range bar price action to me, as far as compared to a trend where we are seeing lower highs and lower lows. But that's not the case here. So I think dollar would like to stay weak, and until we get the CPI, we might get to that level where we see a big breakout one way or the other. So that's the one. That's where we are with the USD, and that will be our focus next week. Now with the yen, well, guess what? And this is a comparison that we always make: the dollar versus the yen. And you can see the yen continues to be the weakest one, -3, and even at velocity, you can see it's just a -1. So we're not seeing a whole lot of divergence between the dollar and the yen this week. Dollar and yen are down pretty much the same amount. So we will see if that trend continues next week, or do we see that shift? Because the only time I've really seen dollar weakens is when we see the yen actually start to do better. And that's where the dollar yen try to pull back. So that's something that I'm watching going to next week. But right now, yen remains a gray short here. Now, Swiss franc is another one that I've been very excited about trading lately, and so far has done really well. You can see that we had a nice support making here at about 50 moving average. I still think this thing has a lot more room to fall if it can break below that support. So we went from a +2 now to a 0. I'm looking for the 0 turn to a -1 and a -2. I think that's where I will see a better trading opportunity. This is franc. Right now, we could base a little bit here, and we are seeing the velocity is changing a little bit. So I think for now, I'm gonna put the Swiss franc on the shelf here. Maybe focus on the dollar, but I'll be returning back to this one. I'm gonna set a price alert right below the support on the daily chart. And if it breaks below that, I'm going to be back on those Swiss franc crosses. Now, on comparison, we have the euro, which has done well recently. You can see it's kind of stalled right above those when it had a breakout above that moving average. So at this point, this one still looks bullish to me. I think it's just making a base. And this is why, as Rob said earlier, trade what's moving. And this is the one that's not, it's just making a base. It's not really a tradable currency at this point. But once it breaks about that resistance level on that velocity, that's really want to get in. So it goes on the list as a strong currency. Now, the pound is the one that's the most interesting, because take a look at that pound. We got a nice breakout on a week like this week, again, after whatever is happening in the politics in the UK. The price action is saying the pound wants to go higher. So far we got a nice breakout. What I want to see next week is that this one continues higher and not breaks or falls back in the range. After every breakout, that's the one thing we want to make sure, that if it doesn't fall back in range, and if it does fall back in range early next week, then again, I'm not going to be liking this breakout. But if it stays above the prior, the resistance becomes a support, and that'll be a great point for looking for an entry here. So I'm very curious about pound. I think it goes on my list as next week for a potential currency to trade. Now, let's talk about what's really moving. CAD has been moving, a lot well, both on the upside, and take a look at it today on the downside. So we had the Canada job support as well, and here we are getting a nice slow push down. So the question is that, are we likely to move lower? I mean, the trend score hasn't changed, but realize that today's candle is nasty here. So we got a support right here in that box. If it breaks below that and breaks below the moving averages, then yeah, then I will be changing my outlook on this one. Right now, I don't want to be trading the CAD here, because the trend is still pretty strong. The velocity is really weak. This goes on the sidelines here, as far as the trading currency go. Now, let's talk about what's really moving. Aussie. I've talked about how Aussie has been, either basing or moving higher. Not a whole lot of pullbacks in between. And here we are, it's closing at the highs for the week. Velocity and trend, they're all matching. And that's really where we get the big movements whenever those two are matching. And even on a 4 hour chart on the velocity, it's just making a nice little high base ascending triangle. We're just going to break out of this one going next week. And, a lot has to do with the market sentiment. As Rob said earlier, market sentiment is positive. And in these kind of environments, you see these growth currencies do well. Now, that's really what we're getting here. Despite of how dollar has been holding up, Aussie's been going higher. So now let's take a look at the Kiwi. And now the big question that we had earlier was that is the Kiwi going to follow the suit? Is it worth taking a shot to the upside? And I think it does, especially if they don't cut rates and they're not as dovish. I think this can easily catch up to the Aussie here, getting back to the resistance level on this daily chart. So, everything is lining up for the Kiwi. I think once we pass that rate statement, I will be more interested in trading the Kiwi to the upside rather than the downside. But again, if it breaks below the 50, then I'm totally out. I'm changing my outlook on this one. But right now we are within that box, within the range, and we're looking for a breakout. So I think this will be a currency to trade next week because for the last 2 to 3 weeks, Kiwi has been on the quiet end. Maybe next week, Kiwi probably more active with the RBNC ahead. Back to you, Rob.
And Ankit, I totally agree. With the right news from the RBNZ, this Kiwi could be a really big trade over the next week or two. I really like the way it's setting up, but we have to get the price action to prove our premise. I've said things like this a lot. The price action didn't confirm it, and then I just say, oh, I was wrong, and I forget about it, and I go back to buying the Aussie. That's simply all that is going to happen. But if the Kiwi does start to take command and break out, and we break out of that base, man, I'm going to be jumping over to the Kiwi for sure. So going into this week, my first trade I'm going to be looking at on the long side is pound is number 1, Aussie's number 2, and then Kiwi number 3. And on the short side, I agree with you. I think dollar is the play. I think dollar is likely to be weaker than yen for the first time in a while. And I'm also watching that Swiss franc as well. That Swiss franc goes to that -1, -2. I'm licking my chops on it. All right, velocity, what's moving right here, right now? Kiwi's got the most velocity. Pound and Aussie are still looking okay. Dollar at a -3. Early on next week, I'm looking at short dollar trades early, and I'm not really married to what I'm going to buy against it. I'll just take a look at relative strength. But right now, what's the strongest? Both the pound and the Aussie are looking to be good pairs against it. Let's take a look at those two currency crosses. Anka, why don't you go first this week? What do you like as far as trades early next week?
Absolutely. Let's just take a look at a couple of currency pairs. Absolutely. So let's just take a look at the Aussie dollar as the first one. I'm going to take a look at how that big breakout that just took place this week after a long period of consolidation. Now, the big question is that are these the dollar crosses are the one that are likely to move? And based on that, I think it's worth taking a look at. Same thing goes, 4-hour chart. It's just moving higher. So a nice breakout. So this is the one that I really like here on some basis, some pullbacks. Kiwi dollar would be another one, just again looking at what's likely to move, and that currency pair also is worth taking a shot at. It's a little bottom of the range, but I think this can easily get towards the upper end of the range. And then Kiwi, the pound dollar, is the one that we can also take a look at it because it's right at the resistance. So if you're gonna go for a breakout, take a look at it. It's right there. So these are the ones that I really like going to next week, and then we'll make changes accordingly.
And Anka, those really cover my favorite ones. I don't really have anything outside of that. I guess I would take a look at, Aussie Swiss franc was, I made 2 trades this week, one in Aussie yen that worked out well. Aussie Swiss franc is, I'm totally flat on the trade, and I'll close it out before the end of the week is done. So, one winner, one break even. After a little bit of a pause, I like this one. I like this one quite a bit after a little bit of a pause, but as you said earlier, we need to see that Swiss franc actually weaken. Then it's going to be a much better trade. So for right now, we're just getting some basing action here. So the fact that we're just getting basing, it's not ready to go yet. But it's going to be one that I'm definitely looking for early next week. Wrapping this up, equity is likely to remain bullish. And look, I know I could write a whole essay on why this market should not go any higher. I would say bad advanced decline line, bad breadth of new highs, new lows, bad breadth of above or below a 50-day moving average. I could write a whole essay, and guess what? I'm likely going to be wrong because price action is king. And a lot of times what happens is it breaks out on these really terrible internals. And then what happens is people then say, oh, it's breaking out in spite of all these, let me put more money in and let me buy all the things that have underperformed. And now all of a sudden you get the broadening of the market and a continuation of the run. That's actually more likely to happen than all these poor technicals showing that there's going to be a big pullback in the future. This week we got RBNZ. Be watching that. I think that is the next big potential trade. But the Aussie and the pound look great. If you don't want to mess with news and don't want to mess with RBNZ, boy, the Aussie and the pound look like really solid trades at the moment. Everyone have a great week. Take care. Stay safe. Goodbye, everybody.